Welcome back to Making Money Matter, ladies and gentlemen. Let's do the deep dive. My name is Kerry Stevenson, and today I've asked Paul Bibby. He's the CEO of Akora Resources. ASX code is AKO, and they are exploring, or should I say developing, an iron ore project over in Madagascar.
I think you're right. Absolutely, Kerry. They're the right words. We've progressed from explorer, we've found the iron ore, and we're now doing the studies to move towards being an operation, a developer. Yes, very much so.
Look at him. He's excited, ladies and gentlemen. Listen, Paul, it's the first time you've come onto this program. So without me giving it all away, why don't you give our audience out there who are Akora? Because you've been flying a little bit under the radar, market cap of about 13 mil. Talk to us about why you're excited and who you are.
No, thanks, Kerry. Akora Resources is iron ore, high-grade iron ore in Madagascar. We've got three very good quality tenement areas. We've been working on the Bekisopa project because of the extensive high-grade outcropping iron ore. Rock chips there, 67%. We've had 4 drilling campaigns in the 3 years since we listed in 2020. So we've been very busy. The first 2 drilling campaigns resulted in the maiden mineral resource of just under 200 million tonnes. The exploration potential has been noted to be 500 million to 1 billion tonnes. So
wow.
we've only drilled 30% to get that 200 million, and it's been shallow drilling. So the maths will tell us that we should be getting way more than 200 million tonnes with future drilling programs. The drilling program of last year delivered indicated resource of direct ship ore, so lump and fines iron ore near surface, which has then gone into become the initial mine life for the scoping study. And the scoping study, Kerry and listeners, was put out in November, so only a month ago, 14th or 15th of November. And we've identified 2 cases there, a low capex case, $55 million to get into production, US dollars, with an operating cost of $42 US a tonne. So very attractive numbers. We have a long-term iron ore price of $100 US per tonne for the benchmark grade of 62%. So there's a margin there of $60. So at today's price, which is I think 135 or 136 US dollars a tonne for benchmark, very strong cash flow coming from that low OPEX case in the scoping study. We also identified a higher capital cost case because that actually results in a lower operating cost. And in the PFS, so by putting in more capital in the crucial areas of the process, you can reduce your operating costs quite significantly. And the higher capital number of 190 million, which is still achievable by a company of our size, has a C1 operating cost of $29 US a tonne. So even a bigger margin. So in the PFS, which we're moving to, the objective is to move between that low capital cost, the high capital cost, identify what is the best operational scenario that gives us the most robust operation for producing DSO lump and fines in the shortest time frame at the best margin.
All right. Couple of things out there, because I know my audience, I love them, they're fabulous. Yep. But some of them are not they don't understand mining. So just, ladies and gentlemen, for you out there, DSO means direct shipping ore.
Yes.
Which means that they're going to mine it and put it onto a ship to get it to their customer.
Yep.
A PFS is a pre-feasibility study. A scoping study is really all about the economics of the project. So Akora have done the scoping study, which means the economics stack up. Is that right, Paul?
Very much. The economic viability for the project at Bekisopa in both cases is very strong. And that's just on the initial mine life of 5 years. And each drilling campaign we do from now, next year and onwards, will add mine life, which will improve the economics even further.
Let me go back a step as well, if we could. Madagascar. Now, a lot of people will know Fortescue and the Pilbara, they'll know Rio and BHP. These are the big guys that, yes, the iron ore giants, if you like. I want to understand Akora, Madagascar, and why people should be having a look at this.
Right. So look, my first 24 years was with Rio Tinto, and I finished in the Pilbara at Paraburdoo. Fantastic experience. What I learned in my time at Rio Tinto, it's all about the quality of the resource. Okay. In the first place, it's the quality of the resource. The second is managing your operating costs to maximize your margin. Our project at Bekisopa, with its outcropping iron ore, the weathered zone lump and fines, is high quality resource. We only need to crush and screen it to produce a product, the direct ship ore. So mine it, crush and screen.
Mine it and crush it means less energy. Is that correct?
We need to crush it to make it the size that the blast furnace needs to consume. That's the only reason we're crushing it.
Okay.
So crushing it is, I just happen to have a prop here. Crushing it is breaking down one of these rocks.
Oh, I love a prop.
Into pieces the size of a golf ball, right? And that is what's called lump iron ore, and that is the preferred feed for a blast furnace.
Okay.
And this rock here grades 66%. So it'll be highly sought after if I've got lots of these rocks, which we've got a fair quantum from the drilling we've done so far.
All right. So with this, again, going back to Madagascar as a jurisdiction, I want to find out, because as I said before, people understand the Pilbara, Australia, good jurisdiction, but Madagascar, many people might not understand it.
No, terrific. No, thank you for reminding me about that. Madagascar has actually got quite an extensive mining and exploration activities going on. There's titanium, there's mineral sands, there's graphite, there's nickel in operation today. The latest project to go into operation was a graphite mine in August of this year. But there's also a large number of companies like ourselves progressing exploration to become a developer. Madagascar has been reviewing their mining code for the last 3 years. Mm-hmm. And in, I'd say, July, August this year, the mining code, with the assistance from the World Bank, went through both houses of Parliament, was signed off by them and signed off by the President. And there, to the best of my knowledge, are no surprises. And I can talk to some of the things that have changed. Mm-hmm. And the other thing that's just happened in Madagascar, and I'm guessing that next to none of us have heard this, is the elections have been held. Oh. The incumbent president has won the election, and his inauguration happens on December the 16th, a couple of days' time. So that's all happened without too much fuss and bother. Otherwise, we would have heard about that, I guess, in the press. So that's a good sign. The mining code, some changes there. The royalty went from 2% to 5%. That's a big jump. But 5%, if you put it into context in Australia, is still below what mining operators are paying New South Wales, Queensland, Victoria, or Western Australia. Okay. So, but they're paying numbers like 7.5. So that's competitive. It's world, relative. So that's all good. One thing they've done, which I actually am in favour of, but some people will probably find it a bit of an impost, is they've put a 3% social and community fund. So if your capital to develop your project is $100 million, you put $3 million into the government social and community fund, and then that gets split to do improvement projects in the region of the mine, but also, projects for the capital in the country. So I'm not unhappy with that. Yeah.
Let's just hope that actually ends up in the right place. Not saying that Madagascar's bad, but just saying sometimes when it goes into a fund, does it go back to the right area?
And look, and that's a fair question. The mining department actually oversees the ethics, transparency initiatives for Madagascar. So they are being watched. So they are monitoring the money and where it goes. And at the end of the day, we've got to trust those people to do the right thing for us.
All right. Just back before you said, I think you said the grade was about 67%.
Yeah.
Again, for people out there that might say, well, what does that mean? Can you just explain it in layman terms?
So this is a rock that I picked up off the surface. Beautiful rock. This grade is 67. This grade 67%. In the weathered zone, we're seeing at surface, grades of 64, 66. Our bulk sample, which we did October last year, the lump product, like that rock I just had, 67, fines at 64. As we get deeper, the grade is getting less. So in our scoping study, the first 5 years of mine life, we've averaged 61. And with some blending and upgrading, we'll be able to deliver a 62% iron product, which is the benchmark grade, which is the iron ore price you see reported in the newspaper or on the news, is for 62%. So that is the objective. As resources are being depleted around the world, because as you mentioned, the Pilbara mines have been at it since the 1960s, they are not necessarily achieving 62% every week or month of the year. So they've got a increasing proportion of 61 and 60%. Some miners are maybe even doing 56 and 58. So having a product that's at benchmark grade will be sought after by the customers. And I feel and I believe that as we do more drilling, we will identify different grades, different tonnages. We can blend those together to enable us to achieve that 61 or 62% benchmark grade from that direct ship ore.
Where do you then send this product to?
Okay, so where Madagascar is off the east coast of Africa, sort of off the coast of Mozambique, it's probably the closest. The nearest major iron and steel country is India. India,
oh, wow. Okay.
And that's half the distance of Australia to China. So India is the nearest neighbour. They are currently producing around 130 million tonnes of iron and steel a year, and are forecast to be producing 250 million tonnes by 2030. So fingers crossed, by the time we're into development, we'll be feeding into that growth in India. And for me, it makes sense. Near neighbour, shorter shipping distance, lower shipping costs, better margins, all around.
And a lot of, from what I understand, a lot of companies out there are looking at that lower carbon emission. So I guess a shorter shipping distance is important. That's sort of that green steel, if you like.
Absolutely. So without a shadow of a doubt, we should not be, no matter what the product is, shipping it at long distances. Okay, that if we truly believe in the climate and the greening. So in our case, India is the nearest market, and they're growing. Below the weathered zone that I've spoken about, and that's the focus of our product quality trials, our scoping study recently. Below that is what we call the fresh rock. It's a magnetite iron ore. The average grade of what we're calling our green steel initial years is 45%, and that upgrades to 69-70% iron for the green steel direct reduced iron processes. So that's our future. So we've got like two opportunities with Bekisopa. The initial one, which is conventional direct ship ore lump and fines for the blast furnace.
Yep.
As the steel industry transitions to decarbonize and become greener, we'll have depleted our DSO, more than likely. We will have generated cash to fund the process changes to make green steel. And, that's where it's at. India will require some of that, but we're also near the Middle East. Middle East is already producing direct reduced iron pellets from high-grade concentrates using natural gas, because they've got an abundance of natural gas in that region for their own steelworks. And Saudi Arabia is presently building 2 million tonne per annum direct reduced iron plants, and they're going to be wanting high quality feed that is going to come from Akora and Madagascar.
I love it. I said right at the start, you're not just an explorer, you're more of a developer. I'm talking to you in December. You've just announced that the PFS is underway. That PFS is not, for those of you that don't know, a PFS is just a pre-feasibility study. I'll get Paul to talk about that a little bit more. Why is it important? What's the time frame?
Okay, so we've just completed the scoping study. And as you can imagine, Kerry, whenever I've gone out in the last year or before that, people say, oh, what's your capital cost? What's your operating? How far is it to the port? They want to know these financial dimensions.
Yeah.
And until you have a scoping study that's been released to the ASX, I'm unable to talk to those numbers. So since November, I've been doing a fair bit of talking, which is nice. The PFS is the next stage of study, and that's all about defining in better quality the resource, the capital and operating costs. So it's giving you a high level of confidence for what those parameters are, what the requirements will be to get you to production. So it's giving investors more confidence that the project has the potential to get into development and what those capital and operating costs will be.
All right.
And what the process will be. Yeah.
And what the process will be. See, ladies and gentlemen, you thought that you could just, this is like all mining. People think that, you open a copper mine in a day or an iron ore mine in a day. You don't. There's so much that goes around this to ensure that the economics stack up, and that this is, because it's a business after all. So you don't want to, but there's a lot of money and a lot of time that goes into ensuring a good outcome for all, because it is complex, isn't it, Paul? I mean, you've got it there. It's at surface.
Yes, yeah. Look, it can be complex. One of the beautiful things about iron ore, and iron ore, in my mind, iron ore is the fundamental commodity, right? It's the main element. We're getting excited about lithium and battery metals and all of these things, and I want them to do well, because to mine it and process, they need a lot of steel, which means there's going to be more demand for iron ore, and therefore good prices going forward for iron ore. And I don't just mean the foundations for the building, I mean the whole process chain, equipment, processing equipment and the like. So iron ore is important. We have the opportunity with Madagascar to have a project that is quite special and unique because of its iron mineralogy. It's readily upgradable. It's close to that Indian market. We don't have to ship it, 10 and 12,000 nautical kilometers. We do 4 or 5. So it's near the market. It's going to be a sought after product. And yeah.
Okay, so going back to the PFS now, PFS doesn't happen overnight.
No.
Well, I'm talking to you in December. Give us an idea of the news flow in 2024. Can't believe it, Paul.
Yes.
But we're coming to 2024, so I don't know.
Yeah, absolutely. Yeah. So I think this time next year, Kerry, we'll be doing another video and I'll be reporting the results of the PFS. That's the plan, if not a bit sooner. Yeah. There's 9 or 10 steps in the PFS study.
Okay.
It's everything from geology, mining, processing, community, environment. It's everything right through to the port. Okay, and it's getting a better understanding of capital and operating costs. What are the issues? How can those issues be overcome if there are any? And getting better definition of the quality of the project from a financial perspective. So 12 months time. And our objective is to start with the port, because the port is often one of the biggest capital requirements in a bulk commodity project. Yep. So look at the port options and how we can best do that and make that a reliable, low cost activity. We will also be doing in the first quarter, so by the end of March, all being well, the next upgrade to our resource, the next mineral resource estimate for this year's direct shipping ore drilling program. So the drilling finished August, September. The assay pulps have been prepared. They'll be assayed in the coming month and go straight into the work that geologists do, resource geologists do, to confirm more resource, which will add tons and grade to the scoping study. So potentially another year or so of resource, which will just improve the economics of the scoping study, but flow into the PFS. Also, in the first part of the year, we will be reporting on the magnetic survey that we did at our other tenement, 40 kilometres away from Bekisopa at Satrikala, where we've walked the ground to get the magnetic footprint of that deposit. It's about a 10-kilometre strike length, we believe, so bigger than Bekisopa, which is 6. And my expectation is that that's going to be a fairly nice magnetic footprint of the Satrikala deposit, which will then give us the targets for drilling for there to again add more tons and grade for DSO going forward. So a lot's happening.
A lot happening, Paul. I know the market for, I guess, explorers / developers has not been the best, but I have to bring it up. Your market cap at the moment is 13 mil. And it sounds to me like you're doing things in a very methodical way. I love the fact that you're close to India, because we know India it's the second largest population in the world.
Yep.
And it's growing, and it's iron ore. And I suspect that market will be a very strong market for yourself. I want to know, do you think investors don't fully understand how much you've done in, because you only listed literally, ladies and gentlemen, 15th of December 2020. So that's 3 years ago.
3 years ago.
Today.
Yep.
You've done a lot of work.
A lot of work in 3 years.
Yeah.
The first 2 years, there was something going on in the world, so I couldn't get out and market and talk about Akora. But the last 12 months, really since March this year, I've been attending selected conferences. I've been talking to investors, doing roadshows to get our company name out there, the project out there. And pleasingly, we have introduced a number of good investors in the last 12 months.
Okay.
And while our share price is 14 cents, it's not what I want. I think we've fared pretty well, considering the year that most junior miners have had. And going forward, we've got some very good news flow. We're progressing, as you said, to the feasibility study, pre-feasibility study and the like. So the money, the effort is going into proving up the iron ore story at Bekisopa.
And as Paul said right at the beginning, he's been in this industry before. He understands some of the challenges around it. So it's a pretty exciting time. Paul, we're running out of time.
Sure.
I'm going to ask you, as I ask many of my wonderful people that I talk to, give us 3 reasons that you think people should sit up and take notice of Akora Resources.
Akora, absolutely. We are moving. We have moved from being an explorer to a developer. So we're moving along that road. We've moved very quickly. Like 3 years, we've done a huge amount of work to get to where we are, and that's going to continue. The scoping study came out in November. That has confirmed the economic viability of our iron ore project at Bekisopa. The low capex option, at $55 million has been well received by investors as a way that they can see a company like ours can get into operation sooner rather than later without diluting shareholders, which is very important. Delivers strong cash flow. Today's price of $135 a ton, that's cash flow of over 400 million pre-tax for the first 4 or 5 years of operation, and less than 2 year payback at these prices. So so all looking very, very good. The current market cap, it's 13 million. People don't know us. We need to get people to understand and buy into the story. It's a very attractive quality iron ore project, a project where we're focusing on the margin and having a margin that's very robust through the cycle. And with the PFS, 12 months time, we will be a lot closer to being a developer and an operator than we've ever been before.
Ladies and gentlemen, they have been flying a little bit under the radar, and as Paul just said, a payback of just over 2 years. They've done a lot of work in the 3 years since listing. It's Madagascar, which is a nice jurisdiction to work in, but I think the key out of this conversation we've been having is just how close Madagascar is to that massive market called India. And that green steel story that will be coming out. And I'm sure I'll talk to Paul about that a lot more next time we speak. But congratulations on the PFS getting underway. Scoping study is done. Ladies and gentlemen, one to watch out for. Paul, I've got one last question for you, and that is your website is akoravy.com. I want to know, what's the VY?
Okay, so we're in Madagascar, as we've mentioned. Akora VY is iron ore in Malagasy. So iron ore is Akora VY. So VY is iron, which probably goes back to a French origin or a Latin origin, I guess. But Akora VY is iron ore in Malagasy.
There you go. I love learning something every day, ladies and gentlemen. Thank you so much for listening to us today. Go and check out the Akora story, as we said, at akoravy.com. Meanwhile, Paul Bibby, CEO, congratulations. We look forward to speaking to you in the new year.
No, thanks, Kerry. Thanks for reaching out and the opportunity. Appreciate it.
Cheers.